I've never seen the demand for precious metals even remotely close to what I'm seeing right now, ever in 34 years. Not even close, not by a million miles. And I will stick to what I've been saying on your show for the past 2 years. This market will define itself by the inability to source product when the music stops.
Welcome to Silver News Daily, your ultimate destination for all things precious metals. If you're passionate about the glimmer of silver and the world of precious metals, you're in the right place. By hitting that magical subscribe button, you're joining a community of like-minded thinkers who see the potential of silver and precious metals shaping the future. Buckle up, because we're diving headfirst into the latest news and updates. When we think about the silver market, we must consider it as a tapestry, interwoven with the threads of global economic policy. And at the heart of this intricate weave is the Federal Reserve, whose decisions ripple through the market with profound consequences. As we edge toward the unveiling of the Fed's report, investors and traders alike are aligning their sights on the impact it will have on silver prices. The link between silver and the Fed's monetary policy is anchored in the bedrock of interest rate expectations. The lower the interest rates, the brighter the shine on silver, as it becomes a more enticing option compared to yield-bearing assets. But as we stand at the crossroads of potential rate hikes, it's the unexpected, a dovish lean or a pause in the rate ascent, that could send silver soaring as it becomes a beacon of safety in a sea of volatile returns. Investor sentiment often dances to the tune of the Federal Reserve's hymnal. A hawkish report might strengthen the dollar, temporarily casting a shadow over silver, but the subsequent economic volatility can thrust it back into the limelight as a haven asset. The mere anticipation of what the report might entail has already sent ripples of speculation through the markets, acting as kindling for potential price movements in the silver market. Moreover, the dollar dynamics cannot be overstated. While a robust dollar, often the byproduct of a hawkish Fed, can challenge silver's appeal, it's the flip side of this dynamic that could ignite silver's rally. If the Fed suggests an easing on rate hikes, it may hint at a pivot toward pro-growth policies, historically a fertile ground for silver's rise. Finally, it's not just about where rates stand today, but where they are headed. The market is always gazing over the horizon, and if the Fed signals a nearing end to its rate hike cycle, it could have marked the peak of the dollar's climb. Such a peak is often a launching pad for silver, as investors anticipate and position for a new phase of economic growth. And while the silver market hangs on the Fed's every word, we cannot overlook the broader economic indicators that also hold sway over its fortunes. The dance of treasury yields, the resilience of the dollar, and the very behavior of the market itself are telling a story that's unfolding before our eyes. A story that we will continue to decode as we now turn to the economic indicators that serve as the compass for silver's journey. Shifting our focus from the Federal Reserve's monetary musings to the realm of economic indicators, we begin to unravel another layer of complexity influencing silver's trajectory. U.S. Treasury yields, particularly the benchmark 10-year note, are surging to heights not seen in nearly 16 years, suggesting an economy bracing for the impact of the Fed's decisions. This surge speaks volumes about investor expectations and market preparedness for a potential shift in the financial tides. The Treasury yield in its ascent sends a signal of robust economic assertions, perhaps indicating the market's preparation for a hawkish hold from the Fed. But it's not just about readiness, it's a testament to the underlying strength of the economy, which can sometimes be a double-edged sword for precious metals like silver. While a strong economy could diminish silver's role as a safe haven, it also paves the way for industrial demand, a significant driver for silver prices given its myriad industrial applications. Concurrently, the steadfast dollar presents a narrative of anticipation. With the dollar index hovering around its current level, market participants are seemingly poised on their starting blocks, awaiting the starter pistol that is the Fed's report. This state of heightened anticipation suggests that the market is perhaps too quiet before a potential storm, or even the smallest shift in the Fed's language could trigger a significant reallocation of assets into silver. This isn't to say that the market is reacting solely on whispers and winds. The CME FedWatch tool suggests that the odds are tilted towards unchanged rates immediately following the upcoming meeting. However, the tool also sheds light on the undercurrents of speculation about the Fed's longer-term strategy, and it's this speculation that could be the bellwether for silver's medium to long-term pricing. Moreover, there's an interplay at work here between the Fed's possible actions and other economic indicators. Treasury Secretary Janet Yellen's remarks on aligning growth rates with inflation targets weave into this tapestry. If growth rates are adjusted to meet these targets, we could see a policy shift that may fan the flames of silver's attractiveness as both an investment and an industrial commodity. As these economic indicators sketch out the contours of the market landscape, they also subtly hint at silver's intrinsic value beyond just the numbers. Silver's allure isn't solely derived from its monetary role, but also from its industrial demand, which is closely tied to economic growth rates and production figures. It's this duality that offers silver its resilience and potential for growth, even as market sentiments sway under the weight of macroeconomic variables. Peering through the lens of these indicators, we begin to appreciate the delicate balance of factors that could sway silver's favor. And yet, it's crucial to remember that silver does not operate in isolation. Its fate is also bound to the movements of its esteemed peer, gold, and the broader commodity market. As we continue to piece together this intricate puzzle, let us now consider the role of market speculation and the path forward, which could provide further insight into silver's prospects in the wake of the Fed's report. Market speculation is the crucible within which the future prices of commodities like silver are forged. As traders and investors parse through the Fed's potential signals, they engage in a high-stakes game of prediction, aligning their portfolios with where they foresee the market heading. This speculation is the very heartbeat of the trading floors, and it profoundly affects the short-term pricing of silver. The consensus among financial sector pundits, underpinned by insights from the CME's FedWatch tool, leans toward a stance of maintaining the status quo on rates, at least in the immediate aftermath of the Fed's report. Yet, within this apparent consensus, there's a simmering cauldron of belief, a 35% conviction that another rate increment could be realized before the year's end. This divergence of expectations is the kindling for potential volatility in the silver market. A notable aspect of this speculation is not just about if and when the rates will change, but also the character of the Fed's rhetoric. Will Chair Jerome Powell adopt a tone of caution, or will he pave the way for a more aggressive rate hike trajectory? His words will be meticulously dissected by the market, searching for clues not just for the end of the year, but looking into the longer horizon of 2024. The underlying sentiment in the market, despite its cautious stance, is not without an undercurrent of optimism. A significant portion of investors is banking on the Fed's guidance to hint at a foreseeable end to the tightening cycle. Should this sentiment be vindicated, we could witness an influx of capital into silver as a hedge against the ensuing currency fluctuations and as a safeguard against the unpredictability of higher-yielding assets. Yes, speculation has another face, one of uncertainty. There is no crystal ball, and the market's confidence is as much about perception as it is about the hard data that will come out of the Fed's report. This ambient uncertainty, while a source of anxiety for some, can also be the catalyst for significant gains for those who correctly anticipate the market's direction. Market speculation, by its very nature, means that for every bet on the future, there is a counter bet. For silver, this could mean that even as some expect a rate-induced lull, others are foreseeing a bullish future. It is in this environment of juxtaposed expectations that silver finds its most dynamic expressions of value. In stepping beyond the confines of market speculation, we find ourselves at the precipice of actual policy outcomes and their subsequent impact on the global financial landscape. As we delve deeper, let's now cast our gaze towards inflation, oil prices, and their intricate dance with silver, which shapes its appeal to investors and its standing in the hierarchy of commodities. As we pivot our discussion to inflation and oil prices, we engage with forces that are both visceral and far-reaching in their impact on the price of silver. Inflation, the invisible tide that erodes purchasing power, is invariably a central character in the narrative of precious metals. Historically, as inflation rises, so does the allure of silver as a hedge against the dilution of currency value. However, the current economic landscape is no mere backdrop. It's a dynamic stage where various factors interplay with intensity. Treasury yields sustaining their elevated trajectory in the face of high inflation point to a market gearing up for a hawkish hold stance by the Fed. This persistent high-yield environment is indicative of a market bracing for continued or increased Fed intervention to curb inflationary pressures. And while these yields might traditionally detract from the attractiveness of non-yielding assets like silver, the reality is more nuanced. Let's consider oil prices, which have seen a dramatic climb, exacerbating inflationary pressures and casting a long shadow on global economic growth forecasts. High oil prices ripple through the economy, increasing the costs of goods and services, and in turn fueling inflation. This scenario typically reinforces silver's status as a store of value when paper currency starts to falter. However, with oil prices climbing, there's a concomitant increase in operational costs for mining and processing silver, which could dampen its supply and inadvertently support price increases. The intersection of high inflation with rising oil prices creates a complex environment for silver. On the one hand, such economic conditions should bolster silver's appeal as an investment vehicle. On the other hand, the Fed's countermeasures to tackle inflation, notably interest rate hikes, can temper enthusiasm for precious metals by increasing the opportunity cost of holding them. Yet it's not just about the mechanics of inflation and oil prices in isolation. Consider Treasury Secretary Janet Yellen's remarks on U.S. growth rates aligning with inflation targets. The policy approach to achieving this balance often involves monetary tightening, which can impact silver in divergent ways, constraining its speculative growth while simultaneously burnishing its credentials as a haven asset. In this intricate dance, silver's dual role as an industrial metal and a monetary asset becomes particularly significant. Its industrial demand is influenced by economic expansion, which in turn can be suppressed by high inflation and oil prices. But as a monetary asset, silver can be buoyed by the very same inflationary concerns that trouble the markets. It's in this space between inflationary spirals and oil price hikes that silver's destiny will be partially decided in the post-Fed report era. With inflation unlikely to abate rapidly, silver's prospects as an investment could be seen through the lens of enduring value rather than just immediate returns. Now, as we look to connect these observations with the short-term forecast and technical analysis of silver prices, we'll see how the convergence of these macroeconomic trends and market behaviors shape the outlook for silver. This synthesis of factors brings us to a more granular level, assessing how each piece of data contributes to the mosaic of market expectations for silver's future pricing. As we zero in on the short-term forecast and technical analysis of silver prices, we delve into the granular specifics that can drive immediate trading behavior. The meticulous study of price movements and chart patterns offers traders and investors a roadmap, albeit one with potential sudden turns and unpredictable destinations. The current positioning of silver prices, as noted in the technical analysis, tells us a story of cautious optimism. The slight uptick in the 4-hour price chart, while subtle, is indicative of a market that isn't ready to retreat just yet. The dance in the prices around the 204H moving average and the 54H moving average suggests that silver is testing the waters, deciding whether to embrace a bullish trend or succumb to bearish pressures. The Relative Strength Index, RSI, modestly positioned above the neutral 50 mark, whispers of a bullish sentiment that's yet to find firm footing. It's like a breeze that has yet to decide if it will grow into a wind strong enough to push silver's sails towards higher prices. Moreover, the market seemed to be drawing lines in the sand with the main support area holding steady, providing a backstop for silver's price. The resistance overhead, however, looms like a ceiling that must be broken if silver is to ascend. The proximity of these technical indicators to key thresholds is a narrative of a market on the cusp, waiting for a catalyst that could be provided by the Fed's report. When we consider the upcoming central bank meetings around the world, the plot thickens. The Bank of Japan and the Bank of England, among others, hold the quill that could rewrite the short-term trajectory of silver. Their decisions will reverberate through the markets, influencing silver prices as part of the broader canvas of global monetary policy. As we parse through this data and its implications, it is critical to remember that markets are ecosystems of vast and varied influences. The technical signals we observe today are not promises of tomorrow's outcomes, but are instead threads in a larger tapestry of global economics and sentiment. In conclusion, while the anticipation of the Federal Reserve's report stirs the pot of market speculation, the actual movements of silver prices in the aftermath will be a testament to how these speculations play out against the hard facts of economic policy and reactions. It's a fascinating narrative that we at Silver News Daily will continue to follow and decode for our audience.